Yo, how's it going? Mark Skipper here. It's been a while, I know. It's good to be back. So we've had the most crazy crash in the history of the stock market. Fastest 30+% decline ever. That's a big deal. Simultaneously, we have a situation with a virus that is causing folks to be at home, work from home, a lot of disruption in our day-to-day lives, in our way we're able to be social to each other. Is that making you down, anxious, have some anxiety as well? Well, if it is, it's completely normal. And if you're not worrying about this to some degree, maybe that's a bad thing. Maybe you're not understanding the impact of this virus, because maybe you're not worried about it impacting yourself. But you also have to worry about those who are more compromised, or those who are more vulnerable and have immunodeficiencies, for example. It's something that we're all a part of right now. We're in this together. We need to help each other get through this and play our part. Okay, what did I do during this stock market crash, and what am I gonna do with the extra cash I have on the side? And maybe that can help with how others might be interested in deploying capital. I'm not really sure. I'm just going to share what my strategy is. Remember, this is not financial advice. All right. So one thing that I did do when the stock market was starting to crash earlier on, I quickly removed one of my positions. And there were two reasons before I explain which position this was to do this. One, I am highly leveraged in the tech sector, especially with Tesla being my biggest position. I wanted to deleverage from the tech sector a little bit. And the second reason is that this was looking to be more of a significant crash than just a pullback. So I wanted to have more cash on hand so that I could leverage that and deploy more money at a lower level, and even use some of that money for more swing and even day trading, because when you're in a bear market, there are some wild swings, and that's just the nature of it. So what stock did I sell out of? I sold out of my Facebook position. I didn't sell all of it at once. I sold most of it in the $200 range, and then the rest of it in the $190 range. And there might have been a few shares that I sold at a little bit lower levels than that. So I sold off one of my biggest positions, and with that I've been buying more positions on the way down with that capital. In addition, I have some of that money for doing swing and day trades, and I've been playing around with mainly options. And so far with that money that I've been trading with, I've gained roughly 50% return of that capital. So I've been doing okay with that money. I'm not void of losses, but I've been just making more money consistently than the losses that I've been making. I've definitely been taking losses, but again, over a 50% return on the money that I was using for these options and these day to swing trades I've been making. When I started to notice a pattern of a sharp decline with a significant bounce, and followed by a sharp decline of a day or two, and then a significant bounce, I started to finally jump onto that. After we would have a bounce, I would buy some leveraged inverse ETFs. When we'd have a sharp decline, I would buy some options in either an ETF that followed the S&P 500 or in some tech stocks. And the specific stocks that I was buying options in were Tesla and then also Salesforce. And so just because I saw some deep discounts in these stocks, I thought that there'd be a pretty significant bounce back. So those are the ones that I've been playing with options. And again, when I'm trying to catch on the way down, instead of buying put options, just because I'm not too familiar with buying put options, so I just decided to go for a inverse ETF that followed the S&P 500 that's leveraged leverage times 2 or times 3, for example. And that's what I've been doing, and I'm still doing in this bear market. But now what about the capital I have? The extra capital I have on the side. that I want to deploy. And how have I been deploying that capital? And how would I and will I deploy that capital moving forward? We had a really nice, hit a nice low a couple days ago. We reached a low of 2016 era. And so that was a pretty interesting level. It was intraday where we hit that. And we bounced off pretty rapidly from that point and closed a bit higher from that. So right now, the last 2 days, trading days, we had some pretty good bounce going in the upward direction. Is this going to be sustained? Well, it looks like it's going to be something that's going to not last. And we're going to go back down. That's at least the most probabilistic scenario. Most likely we'll go down again. And if not, to just test the low before, or to exceed the low and see some new lows. And this is based on two historical kind of close scenarios where we went down a lot in these examples here, and then we went back up on average around a 14% gain, yet to fall below that and even go past the low in these examples by a significant margin, as much as a 30% additional decline. So we have to be open to these possibilities, and this is kind of what it looks like at the moment. And definitely doesn't seem like something that's going to be a substantial thing. I mean, we have to be open to all scenarios. So if we start seeing a sustained gain and we start breaking out of certain levels, we need to be able to switch that mode and not be so tied down to our preconceptions of what and where we might think this market is going. Irregardless of that, what is the plan here? The plan is, should you start investing now? But wait, you just said that you think it's going to probably go lower. Wouldn't I just save my money and not have to see my money drop as much as potentially 34%? Maybe, but we don't know if we're actually going to go lower. We don't know if we're actually going to, how much lower we're going to go. So you want to be able to invest a little bit now on the chance that we just keep going up. We want to invest a little bit, but not everything now, because again, on probability, we think that we're going to go down even further. And if not, to test the low that we already hit and to see if we can stay above that. So what I've been doing, and I think is a good idea, is to put a certain amount in right now. Let's say, for example, you or I have an amount that I've been saving. I'm going to take 20% of it and put it in this month. And take 20% of it and put it in the next month. And take 20% of it and put it in the next month. And this could be chunks of 20% or chunks of 25%, depending on also your risk tolerance. You might want to spread out even further throughout the whole year, for example. And the reason for this is that if you see that the stock market ends up going down another 30%, is that gonna be too much for you? Especially if it's all your money, then you might sell out of that. If it's not all your money and you keep gradually going lower and lower, and even if it goes higher, keep gradually buying in higher and higher, you'll have an average price of what that market did, basically. So if the market starts going down from here, you will have an average price lower than right now we're at like a 20 to 30% decline currently. And so you have an average lower than that. Whereas if we just start going up now, obviously you'd have an average higher than that, but you basically diversify your risk there. And then also, what kind of assets should I put my money in exactly? So if I don't know much about stocks right now, I would definitely just average into an ETF that follows the S&P 500. If you do know a little bit about stocks and want to be more safe, look at some really good companies that are tried and true, that we really need, and we really need to, that will never go away. We're talking about companies like Johnson & Johnson, companies like Procter & Gamble, companies like Google, Amazon, all these companies that they're not going to go anywhere anytime soon. And not necessarily those companies. If you disagree with my companies that I gave as an example that will never go away, think of companies that you think will never go away and have had a stellar track record, whether that is measured by their dividend increases, whether it's measured by their balance sheet, measured by how long they've been around and how they were able to adapt to changing times, for example. These are all good things about a company or their CEO you can really trust, for example. So find out those companies that are really solid and that have kind of less risk than the next stock, for example. Now, if you want to just have a higher risk profile, you can see there's stocks that have been hit massively, over 50% already. And these stocks, especially if they are pretty good and they're in the growth stocks and the tech space, these might have the biggest bounce back potentially. I'm personally looking into a mix of these two things. I've been buying more Tesla when it went down to the 300s. I've been buying a lot more kind of safer companies. I've been buying Johnson & Johnson, AbbVie. I started positions in Visa, I started positions in Boeing, I started positions in Realty Income. These are a few positions that I just started because they were getting to be very deep discounts. Again, all these stocks might continue to go lower. And if they go lower, I will add more to the positions. If they go higher, maybe next month, I'll still try to add more to each of these positions. I definitely want to put my money where I think is the best for my money. So if these stocks might go up a lot, but there's other stocks that are still really good value within my portfolio, I might add to them instead. So that's some things that I've been doing personally. And let me know what you guys are doing, what your strategy is of investing in the market. Are you waiting for it to bottom out? Are you waiting for the trend to reverse? Because a lot of folks, and it's a really good strategy, is to wait for the trend to change. Now, the only problem with the trend changing is that when the trend does change, it could be a matter of days where we hit massive gains. We could hit 20-30% gains when we finally change our trajectory and we have some big news. So there is risk of waiting for the trajectory to change, but then you also avoid your stocks losing massive value potentially. Right now, what if we lose additional 30% in value? So you avoid that, but then you avoid the potential of capturing the value from near the bottom all the way back to the new top. Well, I hope you guys enjoyed this video, and I'll see you guys in the next one. Thanks for watching.